Chapter 2. The quote at the beginning of this chapter is from Benjamin Franklin. The way to wealth, if you desire it, is as plain as the way to market. It depends chiefly on two words, industry and frugality. That is, waste neither time nor money, but make the best use of both. Very sound advice. The title of this chapter is The 10-Minute Millionaire. And yes, you can become a millionaire in 10 minutes. Well, that is 10 minutes a day, and I'm going to show you exactly how to do that. Now, in the previous chapter, you learned how easy it could be for you to become financially free. A few dollars a day compounded over a long period of time. Anyone can do that. You could, but will you? Do you have the will for it? It's easy to dream, but do you have the discipline to do it? $1 at a time? Now, to weaken your will, the world of stuff beckons. Buy this. You need this now. Spend, spend, spend. What do prosperous people do when faced with this siren song of instant gratification? Prosperous people practice 7 financial secrets. I call them secrets not because very few of us are aware of them, but because very few of us use them. The secrets are, in reality, skills, essential money skills that all wealthy people practice, even if they're not aware of it. I believe that if you learn these skills, wealth can flow into your life. Multiple streams of increasing prosperity. Wouldn't that be nice? Money to buy whatever you want, houses, cars, travel, freedom. Surplus to share with the people you care most about. Security, peace of mind. That's what these skills will bring you. Throughout this program, you'll learn how to cut through the blinding blizzard of financial information swirling around you every day and focus on the 7 essential money skills that will take you to financial security. I call these skills money skills. The first 3 money skills form the foundation of all financial success. Without them, none of the other skills have power. If you don't value money, you won't make the effort to control it. If you can't control your money, you won't be able to save it. And if you can't save money, there won't be any surplus to invest. If you don't understand investing, you'll be a less effective entrepreneur. Therefore, you won't have any money to shield, and if you don't have any to shield, you won't have any to share. Therefore, the 7 skills, as you might have imagined, are, number 1, to value it. Number 2, to control it. Number 3, to save it. Number 4, to invest it. Number 5, to make it. Number 6, to shield it. And number 7, to share it. You may be tempted to skip over this material to get to the real money-making chapters, but please be patient. This is the foundation-building stage of financial freedom. For many years, I've taught real estate investing seminars in which people learn how to buy millions of dollars worth of property with little or no down payment. I find that a certain percentage of people who buy property are then unable to manage the cash flow of that property. I remember one student who was especially impatient. He didn't want to waste time learning the basic money management skills. He wanted to make some real money and then hire someone to take care of his money. By asking him a few pointed questions, I discovered that his personal finances were in a shambles. Here was a person living in financial chaos, lacking the discipline to even balance his own checkbook, who could hardly wait to acquire a 50-unit apartment building so he could get rich quick. Well, if he thinks his money problems are bad now, wait until he adds the problems of managing a 50-unit apartment building. That will multiply his financial chaos by 50. So whether you're starting from scratch or doing well financially, we're going to begin at the foundation and build some sound financial management skills. And then we'll move on to the next stage of wealth. I want you to build on a strong foundation of proven financial strength. If you can manage the pennies in your life, then you'll be able to manage the millions that will soon flow into your life. And if you can't manage the pennies, then even though the millions may come, you won't be able to hang on to them. As proof, I simply point to the dismal experience of lottery winners. If they'd simply followed the ideas in this chapter, many of those lottery millionaires, instead of being broke, would be multimillionaires today. Now, in the last chapter, you learned the most basic money skill of all, how to value it. Warren Buffett, one of the world's wealthiest investors, has 2 important rules. Rule number 1, never lose money. Rule number 2, don't forget rule number 1. He hates to lose money because he is keenly aware of the future value of each squandered dollar. For him, a $1,000 loss today represents the loss of millions of future dollars. So skill number 1 is to value it. The following quote explains how billionaire John D. Rockefeller taught his children the value of money. And this is quoted from a book called Kids and Cash by Ken Davis and Tom Taylor, 1979. John D. Rockefeller Jr. was certainly not trying to save money when he decided to pay an allowance to his 5 sons. According to son Nelson, we got 25 cents a week and had to earn the rest of the money that we got. To earn part of that extra money, he raised vegetables and rabbits. We always worked, according to Nelson. All the boys were required to keep personal daily account books. They were required to give 10% of their income to charity, to save 10%, and to account for all the rest. They had to balance their account books every month and to be able to tell what happened to every penny they earned. Nelson went on to serve as governor of the state of New York for many years and ultimately became vice president of the United States. One of his brothers, David Rockefeller, chairman of the Chase Manhattan Bank, says, "We all profited by the experience, especially when it came to understanding the value of money." End of quote. Interesting, don't you think? You'd expect that these kids raised in the lap of luxury wouldn't need to learn these things. Yet Rockefeller wanted his kids to understand money. He taught them a specific pattern for dealing with their money. There is a lot of wisdom in what he said. Number 1, the necessity for work. When you earn it, you value it. Number 2, the importance of charity. Give away the first 10%. The need for saving. Pay yourself the next 10%. And finally, the power of accountability. Account for every penny. And those were the principles: work, charity, saving, accountability. In addition to valuing money, Rockefeller was teaching his kids how to control their money. And that's the second of the 7 money skills. Money skill number 2, control it. The first step in gaining control of your finances is to set up a simple system for organizing your financial life. You may already have a system for controlling your finances. Maybe use one of the popular computer programs such as Quicken or Microsoft Money. Even so, I think you could learn a lot from a simple system that I've created called streams and leaks. Most people have one simple stream or main source of income, their job. This income flows into the reservoir of their life, but the reservoir has leaks and the money flows out through them. Most everyone spends every penny they earn and then some. Obviously, the only way to have overflowing prosperity in your life is to plug up those leaks and to add more streams, to have multiple streams of income. It's crucial to plug leaks and keep streams flowing. How many financial streams do you have flowing into your life? And how many leaks are there in your reservoir? Let's look first at plugging the leaks, and then we'll focus our attention on how to keep the streams flowing. I've condensed the many ways you can spend money into 10 categories, or leaks, and I've kept the categories simple and broad. If they get too complicated, you'll ignore them. Even when using a computer finance program like Quicken, you can organize your expenditures into these 10 categories. It's easy to remember the categories. They're listed in order of priority. The first leak, or category, using the Rockefeller model, is called giving. This represents your contributions to your church, charity, and others. This category is number 1. And according to Rockefeller, it was the most important. He made his kids give away the first 10% of every dollar they earned. Now, why do you think he did that? Just think on it for a minute. And I'm going to put that first here in my categories. I think you should be giving away the first 10% that flows into your life. Now, I find it interesting that Rockefeller taught his kids to give the first 10% of their earnings to others. Now, after you pay the first 10% to your silent partner, you pay yourself next. Yes, the next 10% of your money belongs in Category 2, and Category 2 is called self. In the classic book, The Richest Man in Babylon, George S. Clason tells the story of the wise investor whose primary rule was, a part of all you earn is yours to keep. How true. Most of us save out of what's left over. Prosperous people save first and then live on what's left over. This makes a huge difference. After you pay 10% to others and 10% to yourself, the third category, number 3, is called taxes. And if you'll pay the first two, if you'll give to charity first, and if you'll save for yourself in some tax-deferred way, then you can deduct both of those items off of your taxes. In other words, your tax bill is going to be smaller. But if you don't do those two things, you're going to be giving as your charitable donation to Uncle Sam or to your tax entity, whichever that might happen to be, and therefore you don't want to do that. Now, category number 4 is called shelter. It's the next biggest expenditure of your life. Now, this is in the form of your house payment or rent. The 5th category is household expenses, such as food, clothing, television, and the normal expenses of living in your residence. This will amount to your largest category. So let's look at these 5 categories at first. Every time you spend money, you want to see which category it flowed through. Was it tithing? Was it your investments in yourself, that 10%? Was it for taxes? Was it for your house payment? Was it for household? Those are the first largest expenses of your life. Now comes category number 6. I call that auto. You need transportation. Every time you pay for gas, transportation, and repairs to your vehicles or make car payments, you should organize these expenditures in category 6. The next category is category 7, fun and entertainment. I remember it myself by thinking the number 7 is a fun number, so that means every time I spend money in the category of entertainment, it's a number 7. Whenever you spend money away from home on movies, fast food, travel, or toys, you should think of these expenditures as part of category number 7, the number for fun. Then comes category number 8, which is all forms of insurance. Health insurance, life insurance, disability, liability, personal possessions, homeowners, and so forth. The miscellaneous expenditures in your life, including payments towards debt, come under category number 9, and I call that debt/miscellaneous. And finally, there is a category 10, and that stands for all business expenditures, things that you could deduct for your home-based business or any business that you have. Now, as you can see, all of your expenditures can be summarized into just 10 broad categories. It might seem a little confusing to you at this particular point, maybe having heard it for the first time, but relax, you'll get good at it. For instance, suppose I send you to the store and tell you to buy something for some food. Which category is it going to come under? It's going to come under number 5, which is household. If you go to the movie, which category will it come under? Number 7, which is for fun. If you have a business expenditure, something you could deduct from your taxes, it's number 10. You see, it gets easy after a while. Now, you only spend money a few times a day, and yet those few decisions can make all the difference between poverty and wealth. Let's examine the actual act of spending money. Now, let's dissect a typical money transaction or money event. If you could dissect a normal money event, what would it look like? Prosperous people have a unique attitude towards each money event. During a typical transaction, they complete a few extra key activities. In doing so, they spend a few extra minutes per money event. I believe that it is these few extra key minutes that make all the difference, and that's why I call it the Millionaire Minute. Would you invest a few extra minutes per money event if you knew it would eventually help you become financially free? Here's how people who are good with money approach a money event. Number 1, they plan the purchase. As with airline tickets, the longer the planning horizon, the cheaper the purchase. Number 2, they expect, ask for, and often get a discount. Number 3, they expect, ask for, and always get a receipt. Number 4, they always examine the receipt for errors. Number 5, they immediately write on their receipt a category number. Number 6, they balance their accounts to the penny. And number 7, they file the receipt as soon as they get home. All told, on average, the millionaire spends about a minute or two more per transaction than the poor person. This takes no more than 10 minutes a day. But what a savings in time and money. The Millionaire saves from 10 to 20% by comparison shopping. What if you could lower your annual spending by 20% without a lot of sacrifice? By investing an extra minute to record the transaction and to file it properly, you have at your fingertips a vast source of information. You know your current account balances. You can compare your spending to previous months, and you'll notice trends. You are more aware of your actual spending. This gives you much greater control of your finances. You can calculate your tax consequences in minutes, not days. You can back up your tax decisions with instant documentation. In case of dispute, you know where, when, and how you spent your money, and you have a receipt to prove it. You are in control, and the resulting peace of mind creates a feeling of power. This increases your confidence, creativity, and judgment. You make fast, correct, decisive decisions. This gives you that secret millionaire's advantage. From now on, every time you spend money, take a few extra minutes during that money event to practice the Millionaire Minute. Plan your purchase. Get a discount. Get a receipt. Examine your receipt. Categorize your receipt. Balance your account right there on the spot and file your receipt. Setting up your filing system is simple. Here's what I recommend. Get 10 manila folders and number them from 1 to 10. At the end of the day, quickly file your categorized receipts into one of the 10 manila folders. If a receipt is a household expense, file it in folder number 5. If it's for entertainment, file it in folder number 7. Where would you file a receipt for an automobile expense? Category number 6. How about a business expense? Category number 10. Do this and you'll be in control of your expenses in a few short weeks. Now, why go to all this trouble? Remember, in Chapter 1, I explained the power of compound interest, how just $1 a day can grow into millions given enough time. By practicing the Millionaire Minute, you will be able to find that extra $1 to $10 a day to fund your investment program. You can grow wealthy on the money that is already flowing through your fingers. Now, most people don't practice the Millionaire Minute. Therefore, they don't plan their purchases. This alone increases their living expenses by at least 10%. In addition, they don't collect the receipts. And if they do, they throw their loose receipts into a shoebox somewhere. At the end of the year, doing their taxes is a real chore, taking time and extra money for their accountant to sort out. More lost money. Just how much are those lost receipts worth? Suppose you buy a pen and instead of throwing away the receipt, you actually keep it, categorize it, and file it for tax time. Now you have proof of a tax-deductible expense for your home-based business. You can deduct this expense from your income before you calculate your taxes. What is that worth to you? Well, if you're in the 30% tax bracket, every dollar you categorize as a tax deduction gives you a 30% return. Did you get that? Hello? Where can you today get an instant 30% guaranteed return on your money? When you get and keep the receipt for a tax-deductible expense and then deduct that expenditure on your taxes, you're making 30% on your money. This 30% return on your money is the kind of thing that turns ordinary people into millionaires. Start today to gain greater control over your money by doing the Millionaire Minute. You'll be amazed. Now, if you don't, well, it's kind of like this. Those who are financially challenged, for them, it's a day late and $1 short. If you're financially prosperous, you have abundance and time freedom. If you're financially challenged, you have a short-term planning horizon. You do a lot of impulse buying. If you're financially prosperous, you have a long planning horizon. Those who are financially challenged, they plan their wants and they procrastinate their needs. Where their successful counterparts plan their needs and procrastinate their wants. They put off the things they want because they know there is a never-ending amount of things to want. Eventually, you're going to need to have the money to buy that, and the only way you're going to get that is by procrastinating your desires until you have financial freedom. Financially challenged people, they pay retail. They don't even think about it. Financially prosperous people, they want to pay wholesale for everything. Financially challenged people, they don't get a receipt. Financially prosperous people get a receipt every time. Even if it's for a cup of yogurt, get a receipt for everything you buy. It forces you to think that way. Financially challenged people not only don't get a receipt, but they don't categorize it, and then they don't file it. Well, what I've just taught you here is that you not only have to get the receipt, but categorize it and file it properly. And if you'll start this process to organize your financial life, you will find the peace of mind will be a result of your efforts. You'll be amazed, as I said. Now, money skill number 3 is to learn how to save it. The key to financial planning is cash flow management. You've not only got to get the cash to flow into your reservoir, but you've got to manage the leaks so that there's money left over at the end of the month. And very few people know how to do this. The monthly surplus is the secret to financial growth. The surplus can be invested, and the object of the money game is to accumulate enough investments so that the income from these investments will eventually support you. Therefore, the third money skill is to save your surplus. Now, there are 2 meanings for the word save. The first meaning is to pay less for your purchases. The second meaning is to create a surplus, as in, I need to save some money for retirement. Some people are good at the first save. They like to shop for bargains, but they are terrible at the second save. Wealthy people are great at both. They love to save money to buy things at wholesale, to get a good deal, to get a bargain. They hate to pay retail for anything, and now you know why. Each wasted dollar destroys a forest of future money trees. But they don't stop there. You see, anyone can save money by buying at a discount, but do they save the money that they save? That's the hard part. Do they save is what I call it. A friend of mine quit smoking and was bragging about the $50 a month she was saving by not smoking. And I asked, well, where's the $50? And she didn't know. She had saved the money, but she hadn't saved it. She hadn't put it away. When you save money by changing your buying habits, take that money out of your purse or wallet and get it out of your spending grasp. You won't even miss it. Put it into a savings jar and frequently deposit this money into your savings account. That's when you've truly saved it. Suppose you normally buy your gasoline from a certain gas station. Then one day you notice a new gas station that sells gas for 10 cents a gallon cheaper. With a 10-gallon purchase, you should have saved about $1. But you only notice the benefit of that savings when you take the second step and save it. Therefore, when you go to the cash register to pay for your gasoline, physically take that saved dollar out of your wallet or purse and put it into a savings envelope. You can put the envelope in the side pocket of your car door and let your savings accumulate until you have $25 to $50. Don't be tempted to spend it. You need to transfer those savings into your long-term savings account, and from there into your investment account, and from there into your various investments, mutual funds, stocks, bonds, real estate, etc. You can literally become a millionaire on the money you're wasting. There are 2 major habits you have to have if you really want to save money so that you can save it. When asked for his secret, billionaire businessman J. Paul Getty said, I buy my straw hats in the fall. He didn't buy his straw hats in the spring when the sun was hot and these hats were popular and expensive. He bought them in the fall when they were unpopular and cheap. He used this same philosophy with every purchase, his oil wells, his businesses, his buildings, his corporate jets, and his art collections. He had a wholesale mentality. He saw into the future and scheduled his buying for the cheapest time. He bought when nobody wanted and sold when demand was high. To obtain such bargains, you need to lengthen your planning horizon. Poor people have disorganized short-term planning horizons, while rich people have organized long-term planning horizons. The more scheduled you are into the future, the cheaper your life is going to become. You've got to begin to organize your life like a major corporation. The average American corporation operates on a 5-year planning horizon. The average Japanese corporation operates on a 150-year planning horizon. Now, you might be wondering how the Japanese know what is going to happen in 150 years. Well, they don't have to. Remember, the future is not something that happens. The future is something that you make happen. And you need to start immediately to extend your planning horizon. If you normally plan a week in advance, extend it to 30 days. If you normally plan a month in advance, extend it to 3 months. If you normally plan a year in advance, extend it to 5 years. The further into the future you plan, the cheaper your life will become. Of course, your well-laid plans almost never come to fruition as you envision them. The purpose is not to come up with a plan laid in cement, but to go through the process of planning. I recommend a minimum planning horizon of 90 days. Here's how. Many people spend a few minutes planning their day. This is an excellent idea, but there's a better way. Instead of just planning your daily activities, look at your calendar 90 days out from the day and ask yourself this question. What do I need to do today to make sure that the things I need 90 days from now can be purchased smarter? Scan over the 90-day period to see if you'll need any airline tickets. Does anyone have a birthday? What about other gifts? What about food? What about office supplies? This one simple habit could lower your cost of living dramatically. Successful money managers know instinctively how much easier it is to save $1 than to make an extra one. To earn $1 in net profit, you have to deal with employees, paperwork, hassles, advertising, customer relations, inventory, taxes, red tape, risk, and so on. This is hard. But saving $1 can be done in the blink of an eye by just cutting out an unnecessary expense. Both $1 earned and $1 saved drop to the bottom line. They look the same, but it's much easier to control your expenses than to increase your income. Poor people today always seem to run a day late and $1 short. If you're a day late, you'll always be $1 short. And now you know why. Because procrastination is expensive. It forces you to pay retail prices. Organized people are automatically better off financially because they have time to schedule their expenditures to buy their straw hats in the fall. In other words, if you want to learn to control your money, you have to learn how to control your time. That's the meaning of the phrase, time is money. So the first key to controlling your money is to learn to control your time. And the key to controlling time is to extend your planning horizon. Now, in a later chapter, I'll discuss with you 20 ways to save time so that you can be more organized. But right now, you need to understand the concept. The second major way for you to save some extra money is to do what I call plastic surgery. Would you like to learn how to cut your living expenses by 20 to 30% in 30 seconds? You would? Well, take out all your plastic credit cards, put away one for emergencies, and cut up the rest. Yes, statistics have shown that this simple exercise will automatically and almost effortlessly cut your living expenses by an average of 30% over the next 12 months. Why? Because credit cards provide easy access to purchasing power. If you remove the easy access, you remove the temptation to spend. Thus, your overall spending will automatically decline. With the money you're saving, plus the 10% you pay yourself off the top, you should be able to fund your lifetime $1 million investment program. Now, I want you to imagine a money mountain with streams of income flowing off of it into a reservoir of prosperity, and then flowing out of that reservoir into various different leaks. If you control the leaks of your life, the expenditures of your life, you're going to have more that will be able to flow into what I call these reservoirs of increasing prosperity. The first basin of money that flows out of your reservoir should be your emergency basin. Let your 10% savings flow into your emergency basin first until you have at least 3 months' worth of living expenses saved. You'll be surprised how many people in this country are only one paycheck away from homelessness. Don't let that be you. This money should be in the safest place possible, probably in an insured bank account at the highest interest rate you can find while still having access to your money within 30 days. After this first basin is filled up, your emergency basin, the stream of 10% will overflow into one of 3 additional basins, labeled number 1, conservative investments, number 2, moderately risky investments, and number 3, very risky investments. The older you are, the more money you should have in the conservative basin. And the younger you are, the more risk you can take. So to summarize, you're going to have 4 basins that flow off of your reservoir. First, you're going to have what we call the emergency basin, where 10% of your money is going to flow until you have 3 months' worth of savings for your household expenses. And that's going to overflow into 3 other investment basins: conservative investments, moderately risky investments, and very risky investments. Now, in the next few chapters, I'm going to show you exactly where to put these funds. Once you've got enough money in your emergency account, I'm going to show you where to put your money in such a way that you'll be safe, you can sleep at night, and you can create wealth for yourself. If you'll just let me download my brain into your brain, and if you'll act on the things I'm teaching you, you will be financially independent in your lifetime. On to the next chapter.